Tom, you've been correct about the market's trajectory for a while. Do you believe that the improvements will continue? Yes, I do believe that there will be a lot more tailwinds for markets in 2025 than there were in 2024, mostly because we are no longer concerned about the Fed, inflation, or stopping the growth. Now that the election is over, and there is a lot of money on the sidelines, I believe businesses are finally showing more bravery. What I believe are animal spirits, and a willingness to begin mergers and other capital market activities that will help stocks the following year. However, we were just discussing this. Dollar at year high, Treasury yields at year high. In the past, those two factors have been detrimental to equities. Yes, that has, in a sense, been a market counterbalance. Because you're paying 20 times for a 10-year bond, yields, even at about 5%, don't seem to be doing much harm to markets, in my opinion. Furthermore, it's unclear why yields have been increasing in various ways, in my opinion. The strong economy, inflation, or market concerns about the next administration's tariff policies, among other things, could be the cause. So, even at 5%, I don't think it's a foil, even though I am watching it. First of all, Happy New Year, Tom. It's nice to have you on board. To what extent does the United States benefit from the rest of the world's problems? This is the place to be, as Sarah sort of hinted at the beginning. In actuality, the U.S. economy is the largest in the world. When you combine up all of the largest German companies, the entire German DAX, Dow Jones Industrial Average, is not as large as just Apple or Nvidia alone. To what extent, if at all, have the problems in China and Europe helped the American economy and stock market? I mean, causality is difficult to establish. As you are aware, small and mid-cap companies have dominated the global stock market for a considerable amount of time outside of the United States. I believe that small and mid-cap stocks make about 95% of all listed equities outside of the United States. Additionally, I believe that businesses in the United States have made the proper investments. The United States is the leader in technology, healthcare, and finance, you know. The industries that have benefited from technology the most are those that have, been the strongest. The U.S. advantage is huge, isn't it? I mean, are there really any? Are there dozens or thousands of outstanding tech businesses outside of the United States? Actually, there aren't. However, I believe that Europe and Asia will begin to outperform in 2025 if industrials begin to improve. However, I believe that the United States will be the market that is led by technology. James, Palantir, and a few others dominated in terms of return, but it appears that Nvidia was still our top choice. Who do you think will win 2024's AI competition? What a great question, Oliver. Additionally, I would mention Nvidia because of the enormous demand for their products. However, as we all know, Palantir simply jumped in and took over, surpassing them in stock performance just like a turbocharger. And that speaks volumes about that, in my opinion. You know, a lot of Nvidia's growth may be due to the hyperscalers. Additionally, Palantir's growth can surpass it in 2025. It will essentially expand by 24% or 25% for the year. Of course, Nvidia is a tremendous growth story, but it did reach its zenith earlier in the year. We're still looking at increasing revenues annually, though you know. Therefore, I suppose that Nvidia must have at least some sort of floor. Given the high demand for the stock, how bad might it get? You see, this is the start of a bull market driven by AI technology, and Nvidia has plenty of opportunity to maintain its high revenue levels. We believe Nvidia will continue to outperform indices, albeit it probably won't be exactly as good as it has been. When it comes to the semi-business, it's in pole position. Once more, though, the market will go to where future earnings are most likely to be. That second descendant includes the Palantirs, ServiceNows, and Oracles, as well as undoubtedly software and telecom, before naturally branching out into other industries. James, it looks like Nvidia is fairly fair at 40 times profits. Indeed, they have been able to maintain reporting results that keep that P/E somewhat stable, and as the rest of the market most likely does, I would advise that they trade more on their earnings in 2025. Because I believe the Fed is out of the way, companies will trade more on earnings rather than the Fed. Therefore, you can look at the stock price having that kind of return if Nvidia is, increasing at like 30 to 40% a year. It's not exactly what it was in 2024, but it's still a lot better than indexes. Yes, James, as always, I appreciate your thoughts. Thank you. Excellent work leading up to the 2025 trade there. Palantir versus Nvidia, Tom. Let's start with Nvidia, I guess. Well, what are your thoughts? The increase will undoubtedly slow down after all. Yes. However, given the state of the overall market and other factors, the price is actually rather reasonable. Yes. You also need to look at it. There will most likely be a slight reset at the end of 2024 and the beginning of 2025. At the beginning of December, we have already begun to observe that. The correction territory it's in should be taken into account. Additionally, several of the other Mag 7 names are beginning to receive valuations that are higher than Nvidia's. Oh, and some of the big tech companies haven't indicated that they expect their products to be a pullback. In order to give myself some time in this one through 2025, I looked at something. If you think it will bounce back, and I chose a few strikes that are close to the money at the current rate, say around 130 or 129, where do you think it will rise? However, when you get farther out, and I'm going out to February monthly option series, so a couple months till expiration, okay, from the end of the year, you're offsetting some of the costs on that bullish position. However, that means that if you purchase calls that are potentially at the money, you will have an extrinsic option premium. You wish to deduct a portion of those expenses. I thus examined a simple call vertical here, where I may somewhat offset my risk and perhaps profit from a rise higher in the stock while limiting my gains. Selling the February 145 strike call and purchasing the February 130 call will keep the price below the all-time highs of 152 that we witnessed at the end of November. There is a bullish directional bias here, but it is managed and prudent. This is a bullish call vertical that is $15 broad. If the stock is trading around 129, 130, at that time, you're paying about a 570 debit for it. This is almost 1/3 the bullish call vertical's width. You will break even at 135.70 to the upside if you pay 570. You don't need to make a huge move to the upside on this one in order to make money, because it's only approximately 5% above 129 and 130. You're going to capture some upside here over the next couple of months, but you're also going to escape those earnings that come in at the end of February, so that may be crucial. Okay, like that, huh? Therefore, Nvidia doesn't need to make a big move to get noticed. All you need to do is drift to the top of the range in the early months of the following year and firm back up. Evidently, Palantir considers that it is necessary to adopt a new method, while it is not required, as the volatility is far more prevalent. Yes. Additionally, if you look at their business's commercial side, which is expanding, you'll see that they are heavily involved in the government sector, which continues to generate a significant amount of income. But the commercial side is really beginning to pick it up. That's why, according to their growth projections, Palantir saw gains of over 300% in 2024, correct? I applied the same strategy here at Palantir as I did for Nvidia, despite the fact that valuations may be stretching. The primary distinction is that Palantir releases its earnings in the first part of February. I want to take advantage of it without getting into that. This kind of strategy uses the same bull call vertical here, where I'm going to buy something, around the 70 strike. The 70 strike in the January 31st weekly option. To take advantage of it if you believe that this thing is going to rally into that report, and you can avoid the event risk. Well, you have a little more than a month left before these expire. Sell the 85 strike call, which would set a new record high for Palantir, and buy the 70 call. This version maintains the length and meaning while correcting grammatical faults and guaranteeing clarity. If you would like any other changes, please let me know.